Congratulations to the winner of last month's giveaway. For those of you interested in partaking in next month's, instructions will be down in the comment section below. What is going on, you guys? Welcome back to another video. Today we're going to be highlighting 3 stocks to buy going into the month of April. And April is actually my favorite month of the year, not only because we have some wonderful stocks to dip our toes into, but also because we have the NBA playoffs. So thumbs up if the Raptors are going to win this year. I say they're taking Golden State in Game 7. At least let a man dream. But today should be a very valuable video. We're going to be covering one of my favorite Canadian stocks, followed by a Chinese stock. And then what we're going to be doing is something a little different. For the third stock, we're actually going to be highlighting the entire Boeing situation, kind of doing somewhat of a deeper dive, and then assessing whether we think this is a buy, sell, or a hold. So whether you're interested in Boeing or not, I'd suggest sticking around. It should be a really good segment and hopefully is worth the watch. As always, if you guys enjoy the video, be sure to give it a thumbs up. But the first stock that we're going to be highlighting is a company called Brookfield Asset Management. The ticker here is BAM. Bam! And it does trade on both the US and Canadian exchanges. So the Canadian ticker here for us is BAM.A. And Brookfield is flat out, at least in my opinion, one of the healthiest, most well-run companies out there. They're basically what they are. They're a massive asset management company here in Canada. As we'll look at in a second, they're very heavily involved in managing real estate. Brookfield Asset Management is actually the parent organization or the parent company, and under their umbrella, they have some of the nicest dividend yielding stocks out there. You may have heard of some stocks such as Brookfield Infrastructure Partners. The ticker here is BIP with a 4.99% yield. They own a property business, which is their Brookfield Property Partners, ticker BPY, or the REIT, which is BPR. The yield up on this one is up at 6.6%. And then they have a renewable energy business, ticker BEP, with a 6.25% yield. So those are a couple companies under their umbrella. And to put it simply, what these guys do is they own and manage real estate, or they own properties all across the globe, and they're just drawing in income from these. Good example, we can highlight their REIT. And what is a REIT? Well, a REIT stands for a real estate investment trust. What that is essentially a company that owns a variety of real estate. Typically, we're talking here commercial buildings, so things like office spaces, shopping malls, sometimes residential units as well. And they rent those out, or they lease out those properties or real estate. And those payments that are coming in, they just collect them. They collect all these payments from all of their buildings that they're operating or managing, and then they distribute a good chunk of that out. And that's why we see REITs with very commonly some very high yields. And the new news that you may have heard about recently was Brookfield acquiring 62% of Oaktree Capital for $4.8 billion. Now, this is another large asset management firm. You may have heard of the name Howard Marks, very high profile investor. He's the co-chairman of Oaktree. Now, these two businesses are going to continue operating independently, but in my opinion, this is a very nice acquisition to help them leverage each other's businesses, leverage each other's connections. Just reading here, the two companies together will have approximately $475 billion of assets under management, of AUM, and $2.5 billion of annual fee-related revenues, making this one of the largest asset managers out there. And that's really the name of the game for a company like this, okay? It's the recurring revenue, the recurring income. When you have properties all over the globe that every month or every year, you're pulling in X amount of income. Like we just read, $2.5 billion in annual fees, which is almost as predictable as it gets. You can see why a company like this is able to sustain these juicy yields. Taking a look at their numbers, the company has been showing strong revenue growth as well. Dating back to 2012, they've been expanding. We see numbers here of 18 billion, 20 billion, 18 billion, 19 billion, 24, 40, and then in the trailing 12 months, they're up to $53 billion. As well, this stock does trade at a PE of 13, so it's all around, in my opinion, just a very, very solid stock. And as some of you guys may have noticed, BAM stock, okay, so the parent organization, this stock does have a much smaller yield. It kind of reminds me to a very similar case that we looked at like a couple weeks ago, or a couple months ago, I should say, when we highlighted Power Corp, with Power Corp being the parent organization, but Power Financial with a much higher yield. Very similar case here. So BAM stock is currently yielding 1.29%. And if you're somebody that's looking to draw a higher yield from your investments, maybe you could consider looking into some of these smaller companies that we highlighted. Personally, for me, I kind of like going for the head of the snake, just going for the big company itself. So despite a smaller yield, I'm not as concerned with drawing that income and kind of striving for a higher yield, but that's just me. Maybe for an older viewer out there that is more concerned with pulling in some income, maybe you could look into something like the REIT. But the stock currently trades for $61 Canadian. Like I said, have a look into some of the other options, but Brookfield Asset Management is the first stock to buy in April. Moving on to the second stock for today's video, and I really do try my best not to repeat stocks on this channel, just so that you guys can get some new investment ideas, you know, just try to kind of change things up here and there. But this one is one of my top Chinese stocks. It's one of my favorite stocks out there. Despite its poor performance as of recently, it's the company Tencent Holdings, ticker TCEHY. And if you haven't seen the prior videos that I've done on the channel on Tencent, I think there's been a couple of them. I will go dig them up and I will include them down in the description below for you guys if you are looking for more of a thorough breakdown. But for anybody that is new to the channel, very quickly, Tencent is one of the largest tech companies over in China. They're heavily involved in the social media space over there. They have two of the largest network platforms, actually largest network platforms in the world through WeChat and QQ. This is their instant messaging platform. They're also involved hugely in the media side of things, so video outlets, news outlets, music streaming. They also have a very, very popular payment system in WePay or Tencent Pay, and that's really just to name a few. This is honestly a massive company, but arguably my favorite part of investing in Tencent, one of the aspects that I think does get overlooked sometimes is their involvement in the video game sector or the video game space. I feel like we're always talking about video game stocks on this channel, but Tencent is a huge player in the mobile gaming space. So a lot of big iPhone or Android games are produced by Tencent. Take PUBG Mobile as one of their most popular flagship mobile games. They own Riot Games, who makes League of Legends, huge game, and they own Epic Games, which owns a little game called Fortnite. Now, the stock is down about 30%-ish off of its 2018 highs. It was actually down much more than that, but it has picked up as of recently. We can ask the question, why was the stock down this much? And there's very likely, or obviously, a combination of factors that come into this drop. But the first and probably most apparent is, of course, the tension with US and China. This clearly had a negative impact on most Chinese stocks, whether they were directly or indirectly impacted by the trade war. We saw a lot of major Chinese companies dip into bear market territory just with all the uncertainty with the situation and how things were gonna play out. Now, as most of us do know by now, the March 1st deadline for increasing those tariffs, well, that got extended, okay? So this is positive news for both countries, and that is strictly my opinion. And as we come closer to a resolution, that should bear well for Chinese stocks. Secondly, Tencent was one of the best performing stocks in 2017. It was hot. It was up about 150% in the year. And maybe this is just a typical case of a stock cooling off. The stock was maybe a little bit overheated, as very common to see some selling after a good run like that. But as well, they were facing some issues with some of their larger games. Take PUBG Mobile, for example. But without even getting into too much detail on that, because like I said, I did kind of cover those in some of the previous videos, To put it simply, I think that a lot of stocks over in China are looking attractive or looking cheap. Not just China, man. China, Europe. I think that if you actually look abroad outside of the US, there are some nice investment options out there. I've been personally buying the stock for my portfolio. I believe I bought the stock twice during this downtrend. We've been talking about it a ton in our group that the stock is looking undervalued, and it's probably a nice time to start scooping up shares because, in my opinion, the company Tencent is in the category of our FANG stocks here. I really do put it in a similar tier as our Amazons or our Googles or our Apples, but basically the equivalent over in China. When you look at just how dominant this company is in terms of their reach on the Chinese consumer, it's tough to argue with that. This is a major company. Now, of course, as I'll mention quite frequently when we talk about foreign stocks, this does come with a higher risk, at least comparing to investing in some companies here. Take, for example, this stock does trade OTC, if you haven't noticed that already. Like a lot of Chinese stocks traded here in North America, it is structured under a VIE structure. But if you understand the risks associated, you have an appropriate risk tolerance, I would honestly be shocked if this stock didn't push back and reach those previous highs and then push higher. So with that being said, with the stock still down about 25-30% from its previous peak, this one's almost a no-brainer. I don't really like saying that, but assuming you're willing to wait it out, I think this could be a good stock to look into. The stock currently trades for $45 USD. It pays a non-existent dividend, but Tencent is the second stock to buy in April. Moving on to our third and final stock for the video, it is the company Boeing, ticker BA. And like I said, we're gonna break down the situation and see whether we think this is a buy or a sell. And I'm sure most of you guys are familiar with the situation at hand, but if you're not, very quickly, Boeing experienced the second plane crash in a pretty short period of time, both within a span of about 5 months or so, both being on their newest model of plane, the Boeing 737 MAX 8. Now, as we stand today, we've seen the major countries from around the globe grounding this fleet of aircraft as this investigation continues to try to figure out what's going on here, with the US being one of the last to do so, but they have. Now, Boeing's first course of action has been that they released a statement regarding updating the software involved in these planes, okay? That's the fix that they see necessary. Now, they estimate that this could cost the company around $500 million. It's actually not really a timely fix. They believe they can get the software updated within a matter of weeks, about 6 to 8 weeks by a lot of the estimates that I'm hearing. But of course, after that, they'd have to get the plane certified and tested, which will take a bit longer. And addressing that right off the bat, for some of you guys, I don't know, maybe $500 million sounds like a lot of money. For a company like Boeing, who is sitting on a cash balance of $8.5 billion, the $500 million, the costs that are associated with this fix, in my opinion, are not too serious of an issue. Now, Boeing stock has dropped about 15% off of its recent highs, and I will just take a moment here to toggle out and just show the longer performance of Boeing. Just to put this into some context, this has been one of the top performing stocks out there. On a 5-year number, the stock is up over 240%. It's definitely been one of the top performers, if not the top performer, top component of the Dow Jones Industrial Average. So investors have been very pleased with Boeing performance thus far. Now, let's talk about how this situation is going to affect Boeing stock going forward, because that's what really matters to us as investors. We can start by taking a look here at Boeing's revenue breakdown. So as of their most recent earnings report, this would be Q4 of 2018, $60 billion in revenue derived from the commercial airplane segment. This is the largest segment of their business, representing, we see here, a total sales of $100 billion. That's just about exactly 60% of their overall revenues. Following that, they're also involved in the defense, space, and security segment. They make a range of products for the military, and this is their second largest component of the business. This drove about $23 billion in sales. and this makes up right around 23% of overall revenues, followed by a couple smaller segments, so global services, Boeing Capital, and then some other miscellaneous ones. So clearly here, the bread and butter with Boeing lies within their commercial airplane sales. Now, let's break it down even further. This is a chart as of February 2019, so very, very recent. This shows the total number of planes ordered and delivered, and we're highlighting here the 737 model. So as we can see, Boeing has orders for a total of over 5,000 737 MAXs placed. 376 of those have been fulfilled, and they have over 4,600 yet to be delivered. So clearly, a lot does lie on how this situation is going to pan out. This is their newest model. It's their newest flagship model of plane. It makes up a significant chunk of revenue with all of those orders that we just looked at. But as for right now, as investors, really all we can kind of do is sit back, wait for the dust to settle, and see how the situation works out. Now, that does leave us with a lot of short-term uncertainty. In the meantime, if more news breaks, maybe Boeing knew about this, maybe they're hiding something, you never know. Maybe something more serious comes up. Maybe there's issues not only with these planes, but with other planes, maybe other segments of their business. There could very well be some more downside to come. When you think about it, like a 15% drop, that's not that bad in the big scheme of things. Let's talk hypothetically worst case scenario, okay? Let's say worst case scenario, there is something seriously wrong with these planes. If a bunch of these orders start getting pulled, these back orders, that is a lot of revenue that the company will be missing out on. Now, if you ask me, that's not what's going to happen. In my opinion, what's much more likely to happen is that they're going to get this fixed, which they're already working on. They'll take somewhat of a short-term hit in terms of the costs incurred for fixing the planes. Maybe they have to make these odd payments out here and there. But unless something else major pops up, I think the company Boeing is going to be just fine. Just for some reference, if we look back a number of years, this exact company went through something very similar, okay? They had their battery fire incident. This was on their Dreamliner series, basically having issues with the batteries catching fire in the planes. In this case, the stock did drop temporarily, but as the issues were resolved, clearly the company was able to overcome that. And just to be clear here, although Boeing is not currently delivering these planes until they get this situation sorted out, they're still manufacturing them. They're still trying to hit their target, or I should say they are still hitting their targets of, I believe it's 52, about 52 planes per month. So when the air is eventually cleared, they're gonna go right back ahead with filling those orders and honestly, probably making back a lot of that money very quickly that they're paying in fixes. So all of that being said, is Boeing stock a buy? And I've actually been wanting to buy Boeing stock for a little while now. I've been following the stock since 2016. I've been hoping to get in. I just kept watching the stock climb higher and higher. In hindsight, like it would have been nice to have just bought back then, but I was just waiting for a bigger dip. Now, fast forward to today, stock has continued to climb, at least since when I was watching it. I'm still not rushing in to buy this stock. Again, a 15% drop, it's not that huge of a drop for me to be like, this is a screaming buy. I need to rush in and go in and buy Boeing stock. Now, don't get me wrong. If you're somebody that has been super passionate about owning Boeing stock, let's say like you really wanted to buy the stock, to me, I do see this as a very reasonable time to take advantage of this slight sale. I would just say that especially as we find out more information over the coming weeks, I would personally go in with a small position and then work in and build that up over time in case we see a bigger drop coming forward. But I would say that Boeing stock is very reasonably priced. Morningstar has them as a 3-star buy, trading right in that fair value range. This is clearly a very strong company. They have a very wide economic moat. In other words, they have significant advantages that puts them ahead of their peers. I mean, really, Airbus is their only main competition, but Boeing is just so far ahead in terms of size. Boeing is an outstanding business. Really, when you look at it all around, this is a very, very strong company, one of the better companies out there, and that's kind of why we've seen that reflected in the share price doing so well over the past few years. So I wouldn't have an issue getting in at these prices, but like I said, for me personally, it's not a big enough drop for me to be rushing in. The stock does trade at a PE of 21, which is slightly above the index average. It pays a 2.17% dividend, so I can totally see the case for buying into the stock or holding off, but long term I do have very high hopes for this company. You know, when you factor in the diversified nature of their business, like I said, you know, it's not just 737s they produce. They got projects with NASA. When you look at the company's track records, when you look at the back orders on these planes, in my opinion, it's a matter of addressing the issue at hand, getting these fixes done, getting the planes cleared, and getting them back in the air, and the company will be just fine when you look at like the longevity, the long-term prospects of this company. So those are my thoughts on Boeing, guys. Feel free to agree or disagree. I'd actually encourage you guys, leave your comments down below, especially if you disagree. I'd love to hear what you guys are thinking, kind of, you know, your side or your angle on this. Let me know what you thought about the two stocks, and then somewhat of a deeper dive, like not necessarily saying it's an automatic buy. Let me know your thoughts down in the comments below. I would appreciate the feedback. If you guys enjoyed the video, feel free to give it a thumbs up. I really appreciate that too. And if you're not already subscribed, subscribe to the channel. I post a video like this every Monday. If you're interested in joining our membership group, you can take a look at my personal portfolio, see all of my holdings. You'll get instant emails when I go out and place trades for my personal account. That'll be that first link down in the description below. But as always, guys, I thank you for watching. I hope you enjoyed. I hope you all have a nice April, and thank you for watching, and I'll see you in the next video.